What's going on, guys? It's Crypto Bravo, and today I have a topic that's not very fun, let's be honest: Bitcoin and taxes. Um, but I've seen so many people asking questions about this that I decided to take it upon myself to do some research and talk to some people and try to put together something that's easy to follow. Because I notice a lot of the information out there is it's just like way over your head sometimes. This isn't an end all be all video. I just want to say that right out of the gate because I noticed researching this stuff that we're going to need to keep up on this if we want a definitive answer. We're going to need to keep up on this weekly because there was so many differences and inconsistencies I noticed when researching this that I don't think an end all be all can exist right now. Because even some of the professionals that I read articles that they wrote or even talked to some people, I got the vibe that they didn't even know, honestly. They didn't have a 100% clear answer. It was almost their best interpretation or their best guess. That's the vibe I got, honestly. It's so new. If you think about it, cryptocurrencies, a lot of you might think that you got into Bitcoin so late, and I know I thought that at first too, but honestly, this is all really new. So with that being said, do your own research if you want to know more about this. This is just for people that have no grasp on this whatsoever yet, and this is just an easy place to start, okay? And if you're really concerned about it, hire a CPA. Just hire a CPA. You're not going to be able to get all this by yourself. This is just me regurgitating all this info I've found from all different directions and trying to sift through the inconsistencies and put it together in a simple way that you can walk away with knowing more than when you got here, basically. That's all it is. So I know there's going to be people, that want to criticize and, well, I read this and I read that. And yeah, I did too, honestly. There's so much out there, but this is the general information that I got that I found consistencies with. So what is crypto to the IRS? So IRS Notice 2014-21, they basically said that virtual currency or cryptocurrency is a property as far as federal tax purposes goes. It's not a currency, it's a property. So what does that mean for us? That means that Bitcoin is a capital asset. And if you're going to take away one thing from any of this, take away the fact that it is subject to short-term or long-term capital gains, because that's for the most part what you're going to be paying taxes on. So short-term is less than a year, meaning you had that Bitcoin and you held it or you made it and turned it over and realized it in less than a year. And long-term is anything longer than a year. Okay. So what is capital gain? Capital gain is the increase in value of a capital asset. And the gain isn't realized until the asset's sold. That's really important to note, because if you just held your Bitcoin for years and years and years, you're not going to have to pay any taxes on it, which actually, that might be a really smart thing to do, because if you held this thing for 3 years, for example, I feel like in 3 years, cryptocurrencies are going to be a big enough deal to where there's going to be a better understanding and better laws and all this for taxes, because right now it's such a gray area. Like I said before, it really is. So short-term capital gains, these gains are taxed as income based on your tax filing. Okay, and I have an example of this coming up in the next slide. Long-term capital gains, which are the ones you want to shoot for, they're taxed at a lower rate, 20% in the highest tax bracket. Most people qualify for a 15% long-term capital gain tax rate, which is huge, right? Because let's say you sold a few Bitcoin privately and you marked them up, as a lot of people do, 10 or 15%, you're actually not really paying anything. It'll balance out. So that's one strategy you could do, okay? And then those in the 10 to 15% tax bracket would pay 0% for a long-term capital gain. So you really want to shoot, if you're going to pay taxes on this stuff and you're going to be legit about this and take it seriously, you want to shoot for long-term capital gains. So here's a tip. This is the example I was talking about before. To get the best tax rate on your realized gains, make sure you're cashing out on long-term capital gains. So Bitcoin that you've held for over a year. So here's an example. You're in the 33% tax bracket for regular income tax. So your long-term capital gain tax rate would be 15%. So if you realized your earnings at day 364, so less than a year, so meaning that it's short-term capital gain, then you would send 33% of that to Uncle Sam. But if you realize your earnings on day 366, so longer than a year, making it long-term capital gains, you would only have to send them 15%. So that's over half. That's huge right there in and of itself. Like I said, if you take one thing away, take short-term capital gain, long-term capital gain, know the difference between them, know the individual tax brackets you're in, that's your own personal research you're going to have to do. Most people are in the middle one, so around 33, 32% or 15% for long-term. As you can see, you want to shoot for long-term, okay? So, can you write off your losses? Yes, you can. But it's not like most people think, since it's an asset, since it's a property, okay? I've seen a lot of people in groups, what's one that has fallen recently? Like BitPetite, for example. Like, oh, I lost 15 grand in BitPetite. Well, I can write that off. No, no, you can't. You can't, buddy. Because for the IRS, a property loss is capped at $3,000 per year. And it's been this way for 40 years. So you can bet that it's probably not going anywhere anytime soon, okay? So large losses, you're going to have to write off the 3 grand and then carry it forward for the next year. You can carry it forward. And like I said, get a CPA. They'll do all this. You don't want to start messing with this yourself unless you have, CPA background. I definitely don't, and I would not want to be doing that. So here's another thing. Expenses or investments offset your earnings, okay? So I have an example here. So $15,000 put into Coinbase or Gemini, okay? You diversify, you do 5,000 Genesis, 5,000 BitConnect, 5,000 USI Tech, all right? You make 500 from Genesis, you make 1,000 from BitConnect, you make 500 from USI Tech. So you made $2,000. Well, since expenses offset earnings, you made 2 grand while your investment was 15,000. See? I have this up here. So made 2, expense 15, you're 13 in the red. Now let's say let's say that this is me, for example. And then this channel that I started takes off and you guys like the information I'm putting out and I make like a ridiculous amount. I mean, actually it's not even that ridiculous of an amount seeing like some of these other guys what they're making. But let's say I make 20 grand in referrals, because you guys are just piling up underneath me and we're building this crazy team. Now I'm $7,000 in the green. Like that would be my gain on my capital gain, all right? That's what I would need to pay the taxes on from what I've gathered from CPA Buddy and what I've been reading online. That is what you would actually pay the taxes on. Now I used like things like BitConnect for an example for a reason. Because here's a tip. Don't expose more than you need to, okay? Meaning like I would document or put on the books the 15 grand that I initially bought into cryptocurrency with, and my earnings, and then what my total earnings. But you don't need to go and say, BitConnect 5,000 and it made 1,000, because what they could do then is be like, oh, that's a foreign or an offshore investment, and those have the whole other world of tax rules, and you don't want to get into that. So just keep it simple and don't tell them more than you need to. I don't think I can technically say that, or then again, this is not financial advice. Like I said before, I'm not a CPA. You're gonna have to do your own research. This is just a compilation basically of all this research and information that I found, and I'm just trying to put it together as simply as possible, okay? So, spending crypto. This I couldn't believe when I saw this, honestly. So, let's say that you buy a $3 cup of coffee with a coin that you bought for 10 cents. They're going to want you to pay capital gains on that, and that can add up so quick because it's a ridiculous amount. Like, let's say you have to pay like 30 cents capital gain on that $3. Like, that just adds up. Like they really don't want you out there spending this stuff. But I did read, I think it was on Investopedia, that this was suggested. It was suggested by somebody with direct links, or actually from the IRS, I can't remember, that this was an attempt to discourage tax evasion on like huge purchases like houses, boat, car, whatever it might be. And that like individual transactions like this, like very minor ones, wouldn't have any penalties, which I mean, I want to believe that. And after I read that, it made sense, because I can't see them like keeping track of all this. Honestly, that would blow my mind, honestly. So if the IRS exempts de minimis Bitcoin transactions from reporting, it will make tax reporting so much easier for us, because they'll basically just be keeping track of the larger, like the way bigger, substantial purchases, right? And something to note on this, I did see that they did just recently bring a bill suggesting everything that we just talked about above to Congress. So keep an eye out for clarification on that, because I think that is going to be coming soon, and that's going to be really big news, because I think it'll go in our favor. So the uncertainty, excuse me one second. That's a terrible headline, honestly. I don't know why I said that, because there's so much uncertainty. Like I've already said so many times, that's all this is that I found so far, is uncertainty. But one of the biggest uncertainties is how to handle reinvesting one crypto into another. So let's say you trade your Bitcoin for Ethereum. Okay, you haven't cashed out into US dollars, but there's still a case to be made in their eyes. They're like, well, how much was that Bitcoin worth when you bought ETH? And they're trying to like figure out what to do here. I've read so many different things that literally just basically said they don't know. They don't know how they're gonna handle this. So a tip is to just keep extensive documentation of all of it, just in case. So like you're prepared. It doesn't hurt to be prepared. Like if you have documentation of all of this put together already, then you're gonna be good, right? And a lot of these places, like a lot of exchanges and different investment platforms and whatever, mining, they'll have a transaction history, all of it laid out for you. So you don't have to do that much work to keep track of it. Just print it off as a PDF, like every month or so, and just keep notes of all of it. Another tip, have a separate bank account. That'll make your life a lot easier. That only deals with cryptocurrency stuff, deposits, exchange, investments, whatever. Also, if you sell this should be a different tip in itself. I don't know why I grouped it together, but if you do sell and take US dollars out, just pay if you're worried about it, just pay capital gains tax. What we talked about before. As long as you do that, I really think you're going to be fine. You're not going to get a slap on the wrist if you're really worried about it, because you're ahead of the curve, in my opinion. Like a lot of people aren't going to be paying taxes on this stuff. They're just not going to. Like, let's be honest. Like, if you do, you're probably smart. I plan on doing it actually, because I want to take this seriously, and I don't want a bad situation to turn out worse down the road. So, in my opinion, from what I've read, if you just pay capital gains tax, short term or long term, whichever one it might be, go for the long term though if you can. If you just do that right there on all the major transactions, and you don't really worry about the other stuff, I think you'll be fine. But like I said, that's just my opinion from what I've read, and talk to your own CPA, do your own research, okay? And as for the trading between, we're just going to need more information on that. Like, let's be real. We're going to need more information on that, because I couldn't find any definitive answer at all. So, to summarize, when you purchase a cryptocurrency, purchase price becomes base value, okay? When you sell or transfer it, like from Bitcoin to US dollars, that's the sell price. If sell price is higher than base price, it's capital gain. If sell price is lower than base price, it's capital loss. There's a $3,000 cap for that loss per year, okay? If sell date was less than a year, it's short-term capital gain. If it's over a year, it's long-term capital gain. And the long-term one is the more favorable one. Like I said, if you walk away with any information from this presentation, please be like, that's what you need to understand, is the difference between the short-term and the long-term capital gain, and why you want the long-term capital gain. So I have like some relatable examples because I know a lot of people are into high interest yield programs and like cloud miners. So purchasing hash power from a cloud miner would be your expense. So your revenue minus your expense is your profit. This is so that you know what is your capital gain, what to pay taxes on. Excuse me. High interest yield programs like BitConnect, they are an investment in which your principal gets returned to you. So the surplus revenue you receive as interest, that's your gain. So you realize your profit when your value hits an account that is complying basically with the government, that is regulatory compliance with the federal government. So like a bank account, right? Recently, Coinbase. That wasn't recently actually. Damn, that was like a year ago. Coinbase, any exchange like that, they're complying. Cards like BitPay, they're complying too. So anytime it hits an account like that, that is when it's been realized right then and there. Okay. And a tip on this that I received was don't put anything on record or on the books until it hits one of these accounts. Okay. Until you've actually realized it and it's in your checking account or it's on your BitPay card or you totally sold your Bitcoin online and it's in your Coinbase account now as US dollars. All right. So a tip, which I don't think I should be sharing this, but I just thought it was really cool that I found. It's a loophole. So for those of you that watch the whole video, one thing that I know a few guys are doing is they're buying gold coins with their Bitcoin and then just selling the gold coins to pawn shops or private buyers for cash. So take that as you want, but I thought that was a pretty cool little loophole. I mean, I don't see how that could be tracked at all. Anyways, like I said, a lot of gray areas. This is just the information that I found to be consistent through a few sources, personal and on the internet. If you have any problems with this video, like constructive criticism, if you have any other information, please leave it in the comments below. Like I said before, this isn't an end all be all. I'm not sitting here trying to pretend like I'm a professional on this because I'm by no means am I a professional on this. So drop it in the comments below your thoughts or what you've found. And if you like the video, give it a like. Don't forget to subscribe. I'm doing a $1,000 giveaway when I hit 1,000 subscribers. But that's it for today, guys. Later.